Welcome to the live ASX strategy session. Thanks for joining me. Great to have you with me. Lots of interesting things to talk about today, as there often is. We've got the ASX 200, going to have a look at the small ordinaries, got all those commodities to go through, copper, gold, oil, uranium, and uranium's really interesting to have a look at today. And I've also got a couple of stocks, a couple of interesting recent motion trader signals, which I like the look of that I want to have a run through with you. So as always, everything today is general commentary only, doesn't take your personal situation into account. And I'm just going to put up that disclaimer, which I often put up. And look, that just outlines all that. General commentary only, all the licensing details are there. If you need personal advice, you've got to go off and get that separately. Okay, with all that said, I think let's get into that first chart. So I'm going to call up the ASX 200 to get us started with, and it's been a fairly quiet week. Not a great deal of price action. It's really been around a 1.5% trading range that the ASX 200 has been in since last Friday, and you really got to go back to this period during November, where we had mid-November when we had another period of such tight price action. And it's not really that surprising that we are getting this sort of tight price action, because you just look at the strength of the rally through December, and it's just now normal. It's normal that you get that pause in the trend. And we've been discussing this possibility of a pullback over the last few weeks, and I think that it's what we're seeing now, this trading range, I think is all part of that. ASX 200, well, it's still fairly stretched above these moving averages. The moving averages are moving high, they're making a bit of ground, but we are still elevated above those averages. And when we compress this chart a bit, as you know, this big overhead resistance at around 7,640, three previous key high points, all-time high for the ASX 200 up at that region, and we're just currently pinned beneath there. As I've said previously, this is just a natural place for the market to have a pause, and I think it's a good thing. I think it's positive. I think it's positive we're seeing this pause in the market, because as I've said to you quite a few times, consolidations are they're part of a healthy bullish advance, part of a healthy bullish phase. And what they do, they just help work off excess. So when you get a strong run, it just works off that excess, brings the market back, lets those averages catch up. All those things which I talk about quite often. And then what they potentially do is they potentially then set up a platform for the market to have another rally off, if that trend's going to continue. I think the time to worry is when you get strong advances where there is no pause. That's when I think markets are most vulnerable to falling back upon themselves and quickly coming back to where they started. But I don't think that's the current situation we have in the ASX 200. Now, what I want to do, I'm going to put on an RSI. Just go in my indicator list, just call up an RSI. And what I want to look at here, it's interesting when you look at this with an RSI, you can just see this is quite a stretched RSI. You don't usually get it. So this is using this is a 14-period RSI. You often don't see them up this high on a market index. So it's a very strong move when you get it up there. And what often happens, once it starts to pull back, gets back below 80 and starts to recede, it often continues back to 50, which is the midpoint. So as you can see, we're still above there. And just going back and just showing you some examples, so you can see these previous peaks where it's touched 80 and then pulled back. It's come back to around that midpoint or lower, so at least the midpoint. Let's just compress this, get some more data. You can go through this in your own time, but you'll see that these peaks, they do tend to come back to this midpoint. They don't just come back and then run again. They can do that, but more often than not, they come back to the midpoint. So the point being, if this is to run back to the midpoint, it probably entails the ASX 200 continuing to move sideways to lower as well. And so for me, that suggests the odds favour there's more consolidation to come, possibly a pullback to to the moving averages, possibly into the Fibonacci zone. So just quickly putting on some fibs. I'm going to use the low from late November as a full move. I spoke about this last week, like why I'm using the November low rather than the October low. So just go back and have a look at last week's video, and that gives a fib range back around those moving averages. It's not a target, but it's just where you get some nice balance in the price action, and we often see markets move back towards Fibonacci ranges. I don't try and trade off them. They're just something to give me a gauge as to where a balanced move could pull back to. So I think that the way I'm playing this market is to stay in the market. I don't want to get out, and I don't want to try and get back in. So this is where you say, oh, look, the market's going to pause here. I'm going to sell. I'm going to buy when it comes back. A lot of people try that sort of stuff. The problem with that is we don't know what the market's going to do. There's nothing to say the market has to consolidate. There's nothing to say it has to pull back. Maybe it doesn't. Maybe we come in on Monday and it charges up to a new high and gallops away. That's always a possibility. So I know a market could continue to run, so I don't want to get out. I think the overall momentum is to the upside. I think there's a strong, I think the odds favour a consolidation, but I want to stay within that broader, that overall upward trend. I don't want to try and get too clever and get myself out and try and get back in. So I'll use a stop loss strategy to give my portfolio room to move, and then hopefully see off what I think is a pause in a developing upward trend. Like if this is a big range over a 2-year period, which is coming to an end, there could be a sizable rally that comes out of it. Of course, we don't know that, but that's how I'm basing my portfolio positioning. I'm going with that momentum, see where it takes us. So that's why I'm using that stop loss strategy rather than a take profit strategy. And what I want to do now, I'm going to show you the stocks in my own portfolio, and I want to talk about why I'm using a stop loss strategy rather than just taking profits. And so what haven't actually done this before, so hopefully you find it interesting. So this is my self-wealth broking portfolio, and this is let's just work through the dashboard page. Just a few key parts of that. So this is the portfolio value sitting there. So there's $830,000 in open positions. There's 16K of cash. There's another 460K of cash sitting in the account outside of there. So as I've been saying in these videos over most of last year, it was all about being conservatively long, having a good weighting of cash. And my cash weighting has been coming down quite a lot over the last couple of months, and a lot more money's been repositioning into the market. That just shows today's movement. So my account's up 0.17, market's down 0.15, so it's pretty much even Stevens there. Over here, it's I'm being ranked in the top 4% of self-wealth account holders at the moment. So it also ranks people who've got like one lithium stock, which has doubled last night, as the same as a portfolio worth like $1 million. So I don't focus so much on that. I'll show you what I focus on in a minute. This wealth check and safety check. The safety rating, a lot depends on probably around the size of the companies. ETFs have a high safety rating. As you'll see, this is a small to mid-cap portfolio, so the safety rating comes down, which brings back their wealth check. So I don't really worry too much about that. Just some things on the side. And the way all this works, the reason I've got this is because I set this up in October 2015. I wanted a standalone portfolio, which would be my personal motion trader portfolio. And I wanted an account which was just made up of motion trader stocks. So it's all about showing people that I actually do what I talk about, because I know a lot of people come on YouTube and they talk about stuff, but they don't actually do it. So this is the best way to show that I actually do it. And that is, of course, by doing it. So it kicked off with $500,000 in the account in October 2015. It's currently worth about 1.3 mil. As I was saying, about 830K in stocks, about 470 in cash. Now let's go over to my portfolio, the interesting stuff. So Let's load up this. So these are all the stocks in the portfolio. There are around 50 of them. You can see these on the Motion Trader website as well. You just go to the homepage, you can see all the list of stocks that I have. And what's interesting, I'm going to order them. I'm going to order them by terms of overall profit and loss. So my best stock is a company called Duratec. It's up 258%. And just going down through the list. So then you scroll down through the list, and you go through the stocks which are 50%, 20%, 14%, 8%. You just keep coming down. Then we get into the losses. So there's -3, -3, -5, -6, -7, -20. This one's on the way out. It's hit my time limit of 60 trading days. So I'm about to sell that out. There's almost no position there anyway, because I didn't get a full position when I was buying. It ran away on the day and then came back, and I didn't follow through and get any more. But what you can see in the portfolio, and this is in the way that I'm trading the market and how I'm trying to play this current consolidation, it's by cutting. And the reason there's so few losses is not because everything I buy goes up. It's because I don't keep losing trades very long. They've got a short runway to perform. 60 trading days or the preset stop loss. And if they don't perform, they get turfed out and a new stock comes in. So it's we're taking relatively small losses, hence few losses in the portfolio, but my win rate's more like 35%. But there's just a lot of small losses constantly going out. And then when something's working, we get up to the fun end of the portfolio. 250, 100, 170, 165, 154, 101, 97, and so on. So there's five stocks, 1, 2, 3, five stocks over 100%. And all of those 5 stocks have been in the portfolio for over a year. So the big wins take time, and the small losses sometimes don't take too long. So being patient with the winners, being pretty quick sticks and short with the losers. So don't get much time to do much damage if they don't work. And this is the reason why I'm saying my current strategy with the ASX 200 is not to try and take profit because we're up around resistance, because if I was taking profit over the last year or so, every time it looked like the market was going to pause, I wouldn't have these top performing stocks, and my portfolio would look very different to what it currently does. So I don't want to cap my best performers or stocks with the potential to become best performers by selling every time I think there's going to be consolidation. And that's how I'm approaching this current market. I'm giving my winning stocks plenty of room to move around. So like, who knows, take this stock, for instance, Service Stream's up 12%. It might go up 120%, or it might stall and come back, but I'll give it room to move around and see what it does. Like with all these, they all started off at 0, and some move up, some move down. We keep the ones that move up, jettison the ones that move down. The other interesting thing you can do with this Self-Wealth platform, and if you're actually interested in Self-Wealth, there's a link to Self-Wealth in the description section where they'll give you 10 trades if you go through the link, which is below in the description section. But just clicking on performance. And I think this is important to show you this, because I talk about a lot of stuff, so you've got to have confidence that I know what I'm talking about. And I think this is a good way to get confidence that I kind of do know what I'm talking about. I'm the green line. The blue line is the ASX 200, and the light blue line, it's a composition. It's something like it's a benchmark, a Self-Wealth benchmark. I think I read it was the top 10 stocks in the top 20 account holders' portfolio, or vice versa, one or the other. But it's a composite of top performing Self-Wealth clients. And so I've got some good outperformance there. This is over a 12-month period. I moved my account to Self-Wealth in February last year. It'd been over with another broker, but Self-Wealth had much better brokerage, so I moved it over. Opened the account in January, but didn't move my portfolio in until a month later. So the market got a head start on me. You can see this flat line, and then my portfolio starts tracking. The market had a bit of a start. So as that rolls off, I guess my performance will be a little bit better. I can look at it over the last 6 months, and it's got the same start point, and I've got that outperforms. I don't outperform all the time. There are going to be many months where I underperform the market. It's usually when the market's going sideways, consolidating, but it's when the market's trending, that's when these trend following strategies can do quite well. So it's as I say, the strategy is straightforward: buying stocks with upward momentum, letting profits run, taking relatively small losses, spreading risk, and then a really important part is giving winners room to move. And that's what I was talking about earlier. That's what I'm doing now. I want to see whether I can see off a pullback. Maybe it's not a pullback. Maybe the market tumbles and then stop losses get hit. But if it's just a pullback, the aim is to try and see that off and stay with the overall trend. That's how we get those 100% stocks you were seeing earlier. Bit of work to do around mindset and being able to do all this. It sounds straightforward. It is straightforward, but you've got to have the mindset to do it. So that's one of the things I do in the Motion Trader service. It's all about, it's not just providing the signals and calculating the exits, but it's also talking about how do you actually apply that process? How do you have the mindset to let your winners run and cut your losses and not get it the other way around like so many people do, where they cut their winners early and let their losses run, which is the exact opposite way to, I think, that should be done. Now, I'll show you a couple of recent buy signals in a moment, and I think you'll find them interesting. First of all, though, if you're finding this interesting, please hit that like button and leave a comment. Let me know what you think. Let me know what you think. Let me know whether it's helping or not. And now let's move on. Let's move on and do the small ords and get into those commodities as well as those two stocks that are just triggering the signals now. But of course, that wraps up the free section. If you're not a strategy session member, come across and get the rest of the session. There's a link below. You can see that. Click that. Doesn't cost much. Just like buying me a coffee for putting the session together for you. It's such an inexpensive way to come into my world. You can see the sort of portfolio that I run myself, and that's what I want to help you try and run yourself. That's what these videos are about, what the service is about. It's what I do. So, okay, let's move on. Small ordinaries.